Hi, I'm Rachel. Welcome back. In this video, we will continue where we left off in the last video, Form 1040, line 10, which is Adjustments to Income. For line 10, we will need to use Schedule 1, Part 2. The first line of Schedule 1, Part 2 is line 11. On line 11 of Schedule 1, educator expenses are listed. We will again be looking at the taxpayer Emily Green. Emily had $950 of qualified educator expenses. Qualified expenses include ordinary and necessary expenses paid in connection with books, supplies, equipment, including computer equipment, software and services, and other material used in the classroom. Because her expenses were for science supplies for her class, she can deduct this on her Schedule 1. However, only $250 of that is deductible, so we will write $250 on line 11 of Schedule 1. Line 12 is to report unreimbursed job expenses for Army reservists, performing artists, and fee-basis government officials, which is derived from IRS Form 2106. As you can see, IRS Form 2106 is used to fill out employee business expenses for expenses such as vehicle expenses or meal expenses. Line 13 is for the health savings account deduction. A health savings account, HSA, is a savings account reserved for medical expenses. Funds that are contributed to this account are tax deductible on a taxpayer's return, regardless of whether the taxpayer itemizes deductions or not. Line 14 is for active members of the military who are moving due to a military order to deduct their moving expenses. Line 15 is for the deductible part of self-employment tax from Schedule SE. Emily has a small business selling science kits during summer break, so she will have a deductible part of self-employment tax. How to fill out Schedule SE will be explained in the Small Business and Depreciation course in our reading assignment. But for right now, we can go to Schedule SE and take the amount from line 13. 50% of self-employment tax is deductible, and this amount goes on line 15 of Schedule 1. Moving on to line 16, which is for taxpayers who are self-employed to deduct their earnings, such as accumulated interest on their contributions to self-employed SEP, simple, and qualified plans. Line 17 is for self-employed taxpayers who may be able to deduct the amount paid for health insurance, which must be established under the business for them, their spouse, and their dependents. Line 18 is to report when a withdrawal of funds from a time savings account or deposit type of bank or investment account leads to a penalty that is assessed and charged to the taxpayer. Form 1099 INT Box 2 or Form 1099 OID Box 3 will show the amount of the penalty. The amount is entered on line 18 of Schedule 1. Line 19 is used to report alimony paid. For divorce decrees entered into before January 1st, 2019, alimony is treated as taxable income to the receiving spouse and deducted from gross income of the paying spouse. Line 20 is used to report tax-deductible contributions to a traditional IRA. This is discussed in the IRA and other pension plans reading assignment. Line 21 is used for the student loan interest deduction. If the taxpayer's modified adjusted gross income is less than $85,000 or $170,000 if filing a joint return, then there is a special deduction allowed for paying interest on a student loan used for qualifying higher education from an eligible educational institute. The student loan interest deduction is the smaller of $2,500 or the interest the student paid during the tax year. Emily did have student loan interest, and we will return back to this line in a minute. Line 23 is for the Archer MSA deduction. Archer MSA is a tax-exempt trust or custodial account set up with a financial institution, such as a bank or an insurance company. Contributions a taxpayer makes to the account can be used to pay for healthcare expenses, not covered by their insurance plan. Line 24 is for other adjustments. Some example of other adjustments include jury duty pay, deductible expenses related to the renting of personal property, and the non-taxable amount of Olympic and Paralympic prize money. Line 25 is to add up all the other adjustments. Line 26 is used to total a taxpayer's adjustment to income. We're going to return to line 21 and use the student loan interest deduction worksheet to see how much student loan interest deduction Emily qualifies for. Emily had $3,070 of student loan interest. Pulling up the worksheet, it asks on the first line to enter the amount paid in 2023 on qualified student loans. The maximum amount that can be deducted is $2,500. So that is the maximum amount that can be entered here. Line 2 of the worksheet asks for the amount from Form 1040, line 9. Line 3 asks for the total amount from Part 2 on Schedule 1, which is $778 for Emily. Line 4 asks to subtract line 3 from line 2. If this is less than $70,000, then the taxpayer is able to deduct student loan interest up to $2,500. If it was more than $70,000, you would have to calculate the amount allowable to deduct. So because Emily's income was less than $70,000, she can deduct $2,500 of her student loan interest. Because Emily does not have anything on line 22 and on, once we fill in line 21, we can move on to line 26 where we add up Emily's adjustments to gross income. So we have $250 plus $528 plus $2,500, and that equals $3,278. We're going to go back to Form 1040 and fill out line 10 with the amount of $3,278. On line 11, we're going to subtract line 10 from line 9, and we end up with Emily's adjusted gross income. Thanks for watching, and stay tuned for the next video where we will go over the next line 12 of Form 1040, which is for standard and itemized deductions.